Imagine this, you wake up one morning and you realize that the Canadian dollar is down to 50 cents a USD. Suddenly, everything from your groceries to gas cost more. Your savings get eroded and you lose your purchasing power pretty fast. Now, here is the real question. What happens to the social safety net that we enjoy in Canada? Like pensions, employment insurance, healthcare, and retirement benefits. Today, we are going to dive into this topic. Is our entire monetary system about to change? And more importantly, how does it impact you, me, and all other Canadians? I promise to break it down in plain and simple English. No confusing financial jargon, just facts you need to know. To understand what's happening today, let's take a quick step back in history. Our monetary system has changed many times. Back in the day, people used gold and silver as money. Then governments introduced paper money, which was originally backed by gold. But in 1971, everything got changed when the US dollar stopped being backed by the gold. Since then, money has been controlled by these governments and central banks. They can print more of it whenever they want. And guess what? They have been printing a lot of it, especially since the pandemic times. Fast forward to today, we are seeing the consequences. Too much money printing has led to inflation, meaning your money buys less than before. And it's not just Canada, it's happening all over the world. But here is the twist. Some experts believe this system is reaching to its breaking point. That's why many think that we are on the verge of a major financial reset. But why now? What's triggering this shift? Well, there are a few key reasons. Number one, trade wars and global tensions. Right now, the world is in a financial tug of war. Countries like US, China, and even the EU are slapping tariffs on each other. This disrupts trade and makes goods more expensive and creates financial instability. And Canada? We are caught right in the middle. Let's talk about Canada specifically. Our economy is slowing down, as we know, and our debt is skyrocketing. Government debt, personal debt, you name it. In fact, the average Canadian is now more in debt than ever before. And when an economy is built on debt, it cannot survive forever. Something has to give. The loonie isn't looking too strong these days. It has been declining for so many months compared to the US dollar. It's losing value, which means Canadians pay more for imported goods like food, electronics, and travel. And if the global financial system shifts, our currency could get even weaker. Now let's talk about something that affects millions of Canadians, our social safety net, our welfare system. I'm talking about things like Canada Pension Plan, Old Age Security, Employment Insurance, and Universal Healthcare. These programs are essential, especially for retirees, families, and people who rely on government support. But here is the problem. Our population is aging, birth rates are falling, and there are not enough young workers contributing to keep the system running. Here's the math. More retirees plus fewer working age people equals less money going into the system. And if the economy slows down while the government keeps printing money, guess what? These programs get harder to fund. Some experts believe we could see changes like higher taxes to keep funding pensions and healthcare, reduced benefits for retirees and unemployed workers, longer retirement age before you can claim benefits. If you think this is impossible, check the French citizens, because Macron increased the minimum retirement age, more privatization in healthcare, making it more expensive. And if our currency weakens, the money you receive from these programs could be worth less in real terms. So here is the big question. What can we do about it? If the Canadian dollar weakens and the financial system changes, where should we put our money to protect our wealth? The answer? Well, everyone think of their own, but in my case, I would consider gold, Bitcoin, and some real estate, but not in Canada. More on that later. So let's talk about gold. For thousands of years, gold has been used as a store of value. Unlike paper money, you can't just print more gold. That's why whenever there is uncertainty, investors rush to buy it. And look at what's happening now. gold has just crossed $3,000 an ounce. That's a clear sign that people are losing trust in traditional monetary system. Let's talk about Bitcoin, a digital gold. Bitcoin is a new alternative. Unlike government-controlled money, Bitcoin is decentralized. No single person or government control it. And while it's more volatile than gold, many believe it's the future of money. Some countries are even considering using Bitcoin as part of their financial reserve asset. So what you should do to prepare? Here's my action plan, and this may not be applicable upon you, but I'm giving you as an example. Diversify your wealth. Don't keep all of your money in one place, even in one country. Consider having some in gold, some in Bitcoin, and some in different currencies altogether, or maybe some in different countries. I would consider real estate as part of my portfolio, but not in Canada. I would park my money in real estate in the countries where landlord-friendly laws, like Dubai or Oman. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Stay informed. The financial world is changing fast. Keep an eye on the news about the money, policies, and economic trends. Think long term. These changes won't happen overnight, but those who prepare now will be in a better position later. Think about a next 10-year plan. I know this is a lot to take in, but here is the good news. You don't need to be a financial expert to protect your future. Just by understanding these basics, you have already ahead of 90% of the people. Anyway, you let me know what you think about that. Put your comments down below. And if you like this video, give me a thumbs up and subscribe. And if you really want to understand how money works and how to build financial security, check out my course, Macro Fundamentals for Beginners. Link in the description. And let me know what you think about that. And I'll see you in my next video. Take care.